Welcome to Profiletraders. This is Reza and you're listening to my market analysis for October the 14th. Before I proceed into the market profile chart, let's go to see the situation of ES on its daily chart and see what we had. Down there, when we were about 100 points below, I was able to tell you that we could very well in this leg up go reach between 2015 to the upper part of the channel up there, and so far after a push up we stopped exactly at about right there 2015, and now we are coming back down. So the reason for this big move up were due to two things. Number one, going into the earnings season, which is usually a very strong buying period for the market because everybody gambles ahead of earnings. And number two, it is also going into an option expiration week, which is the current week. And it also was mixed up with the fact that the last FOMC minute came out very dovish. So as I said the last time, since the market has anticipated all best case scenarios, which are no rate hikes, very good earnings, and good manipulation on the upside for option expirations, if any of these factors go wrong, which I believe the one that will go mainly wrong is going to be from massive earning disappointments, then this whole move up, which was not met by any kind of a strong buying at all, can delete itself very fast and very brutally on a drop. So better that market delivers whatever it's expected from it, because it is at very dangerous level of resistance here. On the profile chart, very clear that now in order to turn, even try to turn bullish, we have to trade over 2003. As long as we remain below 2003, this could be all noise, retracement back and forth, and ultimately at some point we are going to attempt to break below 1980, and then if we do that, we are wide open to drop into 1960. So it's gonna definitely be a very interesting middle to end of the week, because you're gonna have a lot of big name earnings coming out, and this market is so ahead of itself with that almost parabolic 100+ point rally that it's very ready for a pushback down if there is disappointment. Now for crude, let's also bring its daily. When we were right around 46, right around 46, I talked about us breaking this triangle on the upside, and then I said that once it's gonna get towards 50, it should encounter resistance and possibly come back down, or if it was gonna be very strong push up, and if 50 was able to be cleared, we would have been pushing towards 55. So right now we stopped exactly at 50, and now we are on the way down to 46. Therefore, definitely now we can bring in this 55 to a very strong short-term top for 51. This we can take out. and this for now is cancelled because I don't believe now we have a chance to go to 55 easily unless there is an international event. But as it is now approaching into the bottom of the consolidation down here, between 44.55 to 43.80 becomes support zone. And 50 to 51 resistance zone. So now one is better off to buy as close as possible to the bottom and sell as close as possible to the top. Of course, every time with very clean cut stop loss protections, and then trade it responsively from one side to the other until we get evidence that it's about to exit with a breakup or with a breakdown. So trading range forming itself up. And for the daily, for the profile, what we can see is that the downfall is starting to encounter some support, which is possible that we are not going to start a reversal from here. But for this to happen, we have to clear and trade above 47, not only like 47.02 and believe that's it, meaning that once we break through 47, we need to see clear evidence that it's done with force and success. Otherwise it's going to be just a test of resistance and then we're going to come down. So bracket as well between 47 to 45.9. It's the miniature bracket, and the bigger bracket you got it from this chart. Gold now, very interesting up move, and also very well predicted. This whole thing move up towards 1200 was predicted by me when we were at 1120, and it's all on my recaps, no BS, you can go look. When we were down here, I warned everybody that there was very little sign of selling and that a reversal was going to come here, which should then take us to the other side of this channel, which is at 1200. We are very close to it. We were at almost 12 points shy of it. And this is due to a couple of things. Number one, you have a weakening of the dollar. In case you have not noticed, the dollar is weakening, especially against the euro, and this is telling us a very important story. It is telling us that dollar is under a lot of pressure, and this pressure mainly comes from two sides. Number one, people have lost a lot of credibility in the ability of the Federal Reserve to manage their interest rate decision. Number two, they kind of have a feeling that the Federal Reserve itself is kind of clueless when it comes to the economy, what it should do, expectations, etc., etc. And the other problem that we have is that obviously when you have such a monumental foreign policy shift in a very sensitive region of the world, and where your presence over there was kind of helping you finance your debt, because United States, for example, would provide safety and security for the Kuwaiti, the Saudi, the Bahraini, and etc. As a return for this, they would support us with buying our debt. The same with the Chinese. Because economy over there was good, because we were ordering a bunch of junk from them and they were manufacturing the junk and selling it back to the States, making money, they were buying our debt. But now the problem is that our presence is nowhere to be found, our influence is diminishing, and therefore all these guys are asking themselves, for what reason should I go support the United States debt? They're no longer here to support me. Maybe I should support the debt of Mr. Putin. I don't know. So this lack of demand for the dollar, coupled with lack of trust in the Fed, has caused a very nice rally in the gold. However, we have a very nice run behind us and we are at resistance. Therefore, a pullback from here should not be seen as an abnormal shock, and this pullback could very easily come down towards 1155 and still continue higher. I believe that also if the market starts to weaken, there is very good reason to take money off the equities and put it in gold, because for all these years that the stock market has orgied, oil has been just destroyed and destroyed and destroyed, and its extraction cost is at $12.50. So we are still below extraction cost, and in an environment that this thing could definitely have legitimate reason to go up. So this was Reza with Profiletraders. Thank you for listening, and if you wish to learn market profile, you can get my courses and 1 year to my trading room for $550, money back guaranteed.